Hi everyone, welcome to my channel. In this video, we are going to solve question number 16 to 20 of March 2019 variant 12. First, question number 16. During the year, business issued $1 ordinary shares at 1.20 each. The directors proposed a final dividend at the end of the year, which balances in the statement of changes in equity were affected by these transactions. Here the business issued the share, actual price of the share is $1. Actual price is $1, but they issuing at increased price 1.20. So 1 is the price of the share, 0.20 is the 1 is the price, nominal value of the share, while 0.20 that is premium. Company is issuing the shares at increased price. So here the directors then proposed a final dividend. Final dividend they just proposed. They are not paid the dividend. If they paid the dividend, dividend is paying from the retained earning. But proposed means this is not paid from the retained earning. So what are the changes in the equity? Equity will change in the capital part, increasing with the price 1 plus premium part 0.2 also 20 also increase. So let's check the answer. A. Ordinary share capital. Yes, it is increasing. It will be change in the ordinary share capital. Share premium change. No change in the general reserve. Then no change in the retained earning. Second, ordinary share premium retained earning. B is wrong because business has just proposed the dividend but they are not paid. So the correct answer is A. Next, question number 17. A company has ordinary share capital 250,000. The ordinary shares have a nominal value of $0.25. A right issue is made on the basis of 2 shares for every 5 shares held at a premium of 0.15. What is the total amount of capital raised from the right issue of share? So here given the share capital 250,000 at price 0.25. Then right issue is giving 2 shares of every 5 shares held at increased price 0.15. 0.25 plus 0.15. So first we have to calculate the total share of the company. Then out of the share, the business is issuing right issue 2 to every 5 held. So share is equal to share capital divided by price. So 250,000 divided by 0.25, that is 1 million. Out of this share, every 5 shares held, the company is giving 2 shares. So multiply 2 by 5. So total the company issuing how many shares? They are issuing 400,000 shares. 400,000 right issue. Right issue is issuing 4,000 shares. So here the total amount of the capital. What is the amount of the capital? Right issue is 400,000 shares. What is the price? Price is 0.25 0.25 plus 0.15, that is 0.40. Right issue is at premium. So what is the total amount of capital? Amount of capital is 160,000. So the correct answer is D. Next question. A shareholder sells some shares less than he paid for them. He is selling the shares at loss. That means what he actually paid, he is not getting. He is selling less than the actual price. What happens to share capital of the company? When the shareholders sell or the company issuing the shares at less price or high price at premium, issued at premium or discount, the nominal value, company will enter the capital account. They will open the capital account at the face value or the original value of the share. So here the first answer, decrease by the nominal value of the share sold. No, it will not decrease the value. The value of the share will be the same. Decrease the sale procedure of the share sold. No. Increase by the amount received from the sale of the share. When he is selling the share, how it is increasing? That is wrong. Remain the same as before. Share value is same as before. He sell the shares at less price. It is not decreasing the value of the share. So the correct answer is D. 19. Which item would result in decrease in the expense to revenue ratio? Expense decrease. Accrual for telephone. Accrual will increase the expense. Always we add with the expense. Increase in provision for doubtful debts. It will increase the expense. Prepayment for rent and rates. It is decrease the expense. Return of goods sold. It is not affecting the expense. So the correct answer, prepayment for rent. Prepayment means paid rent in advance. It will be decrease the expense of the current year. So prepayment for rent is the correct answer. Next. A company provides the following information: profit, interest, share capital, total reserve and debenture. Question: what was the return on capital employed or ROC? 2 decimal places. So here profit is given 109,000. Share capital given and debenture. Capital employed. What is the equation to capital employed? Profit divided by capital plus long-term liability. So here the profit is given. Profit is given 109,000 divided by share capital 250,000 plus 129,000 plus 60,000. What is the answer? Into 100. Answer is 24. So the correct answer is 24.83. Hope all are understood today's solution. Thanks for watching.